Did you know that to become successful in the stock market in the long term investment, you have to have a proper mindset? Yes, have you heard that before? So, to understand how and what are the top 10 things which will ensure that you have a proper mindset in creating huge wealth from the stock market, then wait till the end of this video and I'll be discussing all the 10 different areas of the mindset which are required to become successful in the stock market. This is Paresh Desai from Sankalp Eduventture. And if you like this video, don't forget to subscribe to this and also comment below what you have liked. You can share it with your friends also. This might be a little longer video. So in case if you think that you don't have the time for this, please save this video on the YouTube or download it and you can watch it later also. This will be in depth, making you understand what are the top 10 things which are required for making you a success in the stock market. So let's begin. Welcome back. So let us see what are the top 10 things which are required to have a proper mindset in the stock market for long-term investing. So the first belief in the market has to be there. Okay, that is the mindset what you start with. If you don't have belief in the stock market, nothing is going to happen with you. You might be a master in technicals, you might be master in fundamentals, but if there is no belief in the market that the market is going to give you huge wealth, then that is something which has to be really worked on. Okay, so the belief systems are something which have to be taken very seriously and see to it that you have a proper belief in the market that yes, the markets have gone up in the long run and definitely they are going to stay also in the long run and they're going to grow from here. The second one is willing to take a calculated risk. So obviously understand that market is all about taking the risks. And you must have heard so many things about the mutual funds that you are taking a calculated risk, right? So over here, nobody's asking to jump from the window or jump down from a high rise. But we take a calculated risk. In the calculated risk, we understand that what is going to be our risk as compared to our rewards. So unless one person takes a risk in the market, if you think that you are, no, I don't want that to take the risk, then let me tell you frankly and right at the beginning that the stock market probably is not for you. But if you are willing to take a calculated risk and you want little higher returns than what you would get on fixed deposits or even mutual funds, which can give between 10 to 12%, the stock market on the long run can give on an average returns easily between 15 to 25%. So that is the second mindset. Let us see what is the third mindset. So the third mindset says you have to think like a businessman. Okay, so what does a businessman think like? So businessman always is thinking about my cost and my selling price, right? So no businessman would want to buy at a price which is higher than which he is selling for. Okay, तो जब भी आप businessman के जैसे आप सोचते हो, तभी आपका जो cost price है, जो buying price है, has to be lower than your selling price, and see to it that your cost price is as low as possible and your selling price is as high as possible. Okay, so the businessman mindset is very important. Sometimes you might find that the markets have gone very high, so that is not the time to buy, because if you're already bought when the market has gone high, then probably the next buyer who's coming may not offer you a higher price at that point of time. So you have to wait for the proper opportunity and enter into the market only when you think that, yes, this is the right price for me to buy. Let's see what is the next one. So the next mindset is market need not go up immediately. Yes, so this is very important mindset here, because the moment somebody buys, okay, a person who is a novice who doesn't understand how the markets work, then he would be probably entering at the top of a trend. But that is not the place where you should be entering. And once you enter into a particular stock, you want that the stock should start rising up from here, right? You buy, I mean, an investor would think that the moment I buy, it should not fall from here. Or I'm buying because already it is going up, so now it should continue the uptrend. But that does not happen every time unless the stock is in a very strong trend. So you must have observed that sometimes the person buys the stock, but then the price comes down. The reason could be that the purchase has been made when the price is already factored in all the news and has already gone up. So don't buy just based on the news that, yes, there was some good news and now I'm buying the stock. probably the good news which was there has already been factored and the price has already gone up since last few days or few weeks. And now probably would be the time to book the profit for the people who already bought at the lower levels. And if you are entering at the wrong time, then you'll find that you are making losses. So don't have that expectation that the moment I buy, the prices should go up. So for that, you have to take certain care based on the technical analysis, based on certain studies, which you will find that yes, that is the best price which you get while investing in the markets. So let us see what is the next one. So the next mindset is that understanding the market cycles. Okay. And for understanding the market cycles, you have to understand something called as a technical analysis. Now, what is technical analysis? Technical analysis is the study of the charts. I'll just show you how the charts look like. So the charts would be something like these. Okay, so if you see the charts, these are the technical charts. So right now what you see is a chart of Nifty. Okay, so this is the Nifty chart. If you want to see what is Reliance chart, this is the chart for Reliance. Okay, so Reliance is up today. It has given certain breakout and it is quite positive. So if you understand the technicals, then you'll understand how the buying signals come. Okay, so there were some buy signals here, and that is the reason why person would buy here. Okay, so the technical analysis is nothing but the study of these charts, which is called as the candlestick charts. And there are chart patterns, there are candlestick charts, and then there are particular 1 candle, 2 candle, and 3 candlestick patterns which are there. Also, there are chart patterns which are there, which will tell you that yes, this is the right time to buy. And also they tell you what is the right time to sell. So if you have done the technical analysis part, if you have learned it, then very good, congratulations. But if you're not, then please make sure that you understand how the technicals work, and that will make your life much more easier in understanding how these markets work. Okay, so let us go on to the next mindset. Then that mindset is of that within the cycles, you have to understand there are trends. Okay, so when I say what are market cycles, so the market cycles would be where the markets go up and down. Again, they go up and again they come down. Okay, so those are the market cycles. So the cycles you'll be able to clearly understand from the charts which I showed you. And within the cycles also there are trends. Okay, so there could be an uptrend or there could be a downtrend. So you have to understand that yes, if you entered into a stock at the proper time when the trend starts, that is the time which is going to give you profit. Okay, so if you understand the trends, then you will take the entries which will be at the correct point. So please take care of that one, because that's a very important concept here. The next thing what you need to understand from the mindset is that there are going to be pullbacks and pushbacks. Okay, so what do we mean by pullbacks and pushbacks? So pullback would be something where the price has gone up, now it is coming down. So as a long-term investor, you are not here as a trader. Okay, you are as a long-term investor. When you find that yes, my time frame is going to be a little higher, I'm going to wait for a longer period of time, probably 2 years, 3 years. Okay, and then over a period of 2 to 3 years, you'll find that the returns can be consistently high between, let's say, 15 to 25%. So this topic I'm taking right now is about the mindset of the investor. So as an investor, you will not get returns which will be probably as high as a positional trade or sometimes intraday trades also. Okay, if you take on an analyzed basis, the returns here would be much more consistent. Okay, the markets might be going up and down, but what you have to see would be the overall trend, which will be on a little higher time frames. So as long as the trend on your time frame is positive, you remain in the trade, and that's how you can take a benefit of a longer term time frame and see to it that the returns, and you'll see that the returns which you get would be easily between 15 to 25%. Now, this will be much higher than probably an FD rate or mutual funds also. Because when you invest in mutual funds, obviously the cost of the mutual fund are to be borne by you only out of the profits. So, but if you understand how to buy the stocks yourself directly, then it is like you're making a direct buy rather than giving your money to the mutual fund house to manage on your behalf. So do spend little time and understand how this thing works, and you'll find that the returns can be quite higher, much more higher than the other investment avenues. So let us see what is the next mindset is for a 3:1 risk management. Okay, so unless you find that you have made a risk management plan, don't enter into the trade. Because as I said earlier also, this is similar to the one which I told for the businessman. Because unless you see that you get a reward of at least 3 times as compared to one-time risk, it is better not to take a trade. Okay, because these are markets, and in the market there is no concept of time. The concept is of price. So people ask me that, okay, how much time will I get 20%, or within how much time my stock will get double? I said nobody can tell how much time exactly, but yes, based on the price, as and how the price moves, you'll be able to understand that yes, the target can be reached, but the time period cannot be told by anybody, because this concept is not based on time, unlike fixed deposits or any debt instruments, where you know that okay, for 1 year you're going to get 6% or 7%. Here in 1 year you could get 15%, you could get 50%, sometimes you could get 100% also. So that is the concept over here, that you have to understand that when you enter into the market, you have to have at least 3:1 reward risk ratio. Why? Because these are markets. Sometimes there could be a downturn, and in that downturn, you should not lose your money. If you do a simple calculation, and out of the 10 trades, if 5 trades go correct and 5 trades go wrong, the 5 trades which go correct, you're getting 5 into 3, 15x. And 5, if they go wrong, 5 into -1, that is only 5x would be the loss. So you still end up making profit, correct? So that's the reason why I suggest that you should be taking at least 3:1 reward to risk ratio when you're taking any trade. The next mindset is based on the time zone, based on your age. Okay, so why I'm talking this about mindset? Because all this you have to think before you take a trade, right? So time zone based on your age. So suppose a person who is across, let's say, 60 or 70 years, then the time zone should not be 5 years or maybe 7-8 years. The time zone for even longer term investment should be little smaller. But let's say a youngster is there, he's just crossed 20, 25 years, he can have much more higher time zone. Okay, so it could go on to, let's say, 5 years, 10 years, 15 years also. And we have seen that the longer the time zone, the type of returns which have got in the markets are like crazy returns. Okay, so one of the stocks which was favorite of Mr. Rakesh Junjunwala, I'll show you, which is nothing but the Titan stock, Titan Industries. If you see Titan Industries, this stock was at a low of what? If you see just 20 years back, in 2020 or so, this was not even 2020, 2010 or so. Okay, somewhere around 2009 and 10, this was approximately 137. And then that same stock, after just 10 or 12 years, from 130 to 150, it has gone to 2,600. So can you imagine the type of returns which are there over a longer period? So longer the period, the type of returns which you can get can be like crazy. And these are the real wealth generators for you. So let's go on to the next one. The next one is returns expectancy approximately 20%. Okay, sometimes people feel that every stock should be giving me 100%. But guys, that is not going to happen. You might be having, let's say, 15 to 20 stocks. Some stocks can actually give you maybe 100%, 200%. Some might be in losses. Some might give you just 20 to 30%. But on an average, your expectancy should be around 15 to 25%. Okay, if you get more, good. I'll be even very happy for you, and it will be a great thing for you also. Sometimes you enter at a proper time. For example, someone has entered in, let's say, around March, April 2020. Till now, he would have got like maybe 2 times, 3 times, 4 times also within just 2 years, right? But over a longer period, if you have, then the expectations should be between 15% to 25%. So these are all the mindsets. Let me go through them one more time and just summarize. So number one is belief in the market. Believe in the market that yes, that this market is going to go up. And one more thing I'd like to add in this, that belief in yourself, that yes, you can do it. Because unless the person has a belief in himself, nothing can happen. Then willing to take calculated risk. Yes, the risk has to be willingly taken up. If a person is averse to risk, then maybe probably fixed deposit or something is good for it. Then think like our businessman. Your buying prices and your selling prices, you have to be very particular. See to it that you buy at the lowest price, and see to it you can sell it at the highest price possible. And don't have the expectancy that the market should go up immediately. Okay, you might buy also maybe at a lower price, but sometimes there might be some correction before the price actually goes up. You might find that if you bought, then the price is going sideways for some time, right? Maybe it has not hit your stop loss, but it goes sideways. And then suddenly one fine day you find that it is short up. So don't expect that the market should go up immediately the moment you buy. You have to understand the market cycles based on the technical analysis. So learn technical analysis and see how the things work out. And within the market cycles, you have to understand there are trends. So there are trends which could be an uptrend, there could be a downtrend. So if you are an investor, see to it that you enter when the downtrend is over and now the uptrend is starting. So that will be the best time to enter in the market. And also be aware that there will be pushbacks and pullbacks and pushbacks. So pullback is something when the market is, while going up, there is a correction. Okay, so there's something like a correction is called as a pullback. There are going to be pullbacks. And pushback means basically if the market is in the downtrend, there are sometimes ups, but you have to be careful about those stocks because those stocks could be the stocks which are in a downtrend. Risk management, 3:1 reward risk ratio. So your reward has to be at least 3 times the risk which you're taking, because in the markets, this is again something where you are taking more risk than what you'd be taking in a fixed deposit or conventional investment modes. So obviously the reward has to be higher. Okay, the time zone is based on your age. So the younger the person, when you are investing into the market, you can go for even longer period. The example just now I'd shown you was for the Titan Industries. And the last one, which I'll say, that keep an expectancy of 20%. Okay, so don't keep very high expectancy. So it is possible sometimes that you may get 50%, 100% also. But if you have got little lesser expectancy, then you'll find that you're a happy man. Okay, so isn't that the fact that whenever everything is based on expectancy, right? So if you expect something and if you get more than that, you're going to become happier. But if you expect something, if you don't get that, don't you think there is a little bit of bitterness or sadness? So always expect on the lower side, be it market or even if it is life, have little less expectations and you'll find that you'll be a happy man. So not only in the real life, but also in the stock market, this really works. So I hope you have got a good idea about how the mindset should be of a long-term investor. And if you like this video, don't forget to subscribe this, share this, comment below what you have liked. And if you want to have some more videos based on this, do let me know. Then I'll be more than happy to come out with more of these topics. So once again, this is Paresh Desai from Sankalp Eduventture. And I will see you in another video sometime soon. Thank you. Good day. Bye.